Happy Sunday, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be another daily cryptocurrency market update. And if you are new around here every single day at 1 p.m. UK time, we release an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space and also the broader markets. And actually, we're going to take this opportunity with this daily market update to really be refreshing why it is we are bullish on the markets and how actually we've been able to stay bullish on the markets throughout this year, which has now been proven to be the right decision. We were calling for a bull call back on January the 5th, first with my patrons, and then I came out publicly, and we've been positioning accordingly. And we're not positioning now because we think that the markets are going to go down, of course. Otherwise, we'd be waiting for cheaper prices like many people are. We ultimately think that the markets generally, gold, the stock market, we looked at Brazilian stocks yesterday and how they're setting up, for example, not just the US, and crypto are going to do very well over the next 12, potentially plus months into a crash. And a crash has typically always preceded interest rate rises, but there's a lag in getting to that crash. The effects of rates aren't really felt immediately. Yesterday's daily market update is definitely worth a watch, guys, because we look at a lot of the sort of issues with the debt markets and the fiat system right now, which is a debt-based system. And we look at all the refinancing and kind of go into Ray Dalio's inflection point where he thinks we are, which aligns with our thinking that actually, yes, a storm is coming, but it doesn't happen until later in the markets. Factoid here, the S&P will rally within 2% of its high 2 months prior to a recession. So we're going to be doing a little bit of recapping. This theory that we've had on the markets and rates and how we've been able to be bullish is because we've understood the historical correlation between rates and the markets. And markets do very well, and still to this day that's the case, under interest rates going up. They close higher when they stop upping interest rates and when they started them, which is contrary to popular belief. And actually, once they stop upping interest rates, which we're going to show you with gold, again, our kind of thesis on the markets is now becoming very popular. Gold does very well under rates stopping, so does the S&P, and we think crypto will. And what we're going to do is actually look at Bitcoin against gold and the S&P because, this is a crypto channel. Crypto, blockchain, distributed ledger enthusiasts. We really do cover the fundamental side of things, but we also enjoy playing the markets. We think there's a real opportunity with the crypto space here. And I know some people think that talking about price and things like this really trivializes the underlying technology, but I think they go hand in hand. I think with fundamentalists on blockchain, otherwise we wouldn't be interested in this space, but we're also speculators. A large part of what I do and have been doing for a long time is being a trader and making a good living off it, as well as having the amazing opportunity to make content for you guys, which I truly do love and really appreciate everybody's support. So we're going to be doing that in this video. I do apologize. We'll also look at the week ahead for anybody that wants more sort of fundamental news. But I think this is really important to understand where we are from a macro context and where we're going. And we've looked at a lot of technical reasons. We were calling new highs for Microsoft this year, which were smashed, and it's now gone on and put in another high, and many other stocks. We're going to be looking at a little bit of technicals, but more fundamentally, what the markets are going to do probably over the next period. And I want to start things off with this tweet here. Now, I believe this was retweeted from our friend Francis Hunt, the market sniper. Many of you are familiar with him. This individual, essentially, Lawrence something, is kind of, this is a chart kind of reiterating a lot of what we've been saying for a long time in regards to rates going sideways. And what he's showing here is what happens to gold when the Fed stop hiking. And you can see gold in a bull flag at the moment. We're going to look at crypto against gold, Bitcoin against gold, and Bitcoin against the S&P. So I do apologize for this being quite a technical one. If you look at what happens when rates stop, look at the ascent you get for gold. The one in 2000 was 66%. The one prior to that, or post that, I should say, was 189%. The one prior to that, which led into March 2020, was 50%. And today we're potentially at a point where the Fed have stopped hiking. That certainly seems likely if you look at the Fed funds futures and if you monitor things like the FedWatch, CME's FedWatch. It seems likely that they're going to stop rates. And it's very interesting because also to go over to gold, and we're going to relate things to the S&P. Let's take all our draws off because we've got technical reasons to expect the S&P to go on and put in new highs. We've also got fundamentals and where does crypto find itself in this? And we've also been doing a lot of looking at the dollar. which we were very early on calling a turn here with this candle. You know, I really do believe that everyone should subscribe to this channel that's watching this video right now. A like and a comment is always appreciated. You don't need to do that. But we've been on the money with crypto for a hell of a long time in the markets generally. And, you know, a lot of people catch up later on. People are still expecting new lows for this market. You look at the crypto market's already broken out. And then what I'm about to show you is going to really tie everything in nicely. But let's not go sideways, which my brain loves to do. Gold. So this individual essentially is highlighting something that we've been highlighting for a long time now. And that is that gold does well under the stopping of interest rates. Stopped interest rates. Stopped interest rates. And it's always at a point of when they've stopped interest rates being in kind of a sidewaysy period. If you look here previously, I mean, it's kind of doing the exact same thing it did in 2006. If you look here as well, it's basically, our assessment for gold is it's just in a big bull flag. We're going to relate this to crypto in just a second. Look at where your volume is as well in regards to this recent price action. This is a good sign. And historically, actually, if you look at rates and the relationship, you know, you're on for a decent time, in our opinion, a breakout. You know, we can see gold going towards 3,000. This in its own, which is an entirely different video, does make me think, what's the crash going to be? Is that going to be good, bad for crypto and the likes of gold, which are alternative systems? That's for a totally different video. But not only is this the case with, and like I say, I think we're one of the only people to show this. Not only is this the case with gold, this is also the case with the S&P. So we have technical targets for the S&P to get to around about 5,000. I'm going to delete this. You know, we've been very spot on. Look at Microsoft. Our call on Microsoft was golden. I mean, it literally ran into our head and shoulders target, pulled back, and now has gone on in a cup and handle pattern, which silver's potentially in as well, just to show you that. We'll just pull up a basic silver chart. And we're going to go on a monthly. You know, look at, let's get rid of the Fed funds. I do apologize. Look at silver. So there's something walks like a duck and quacks like a duck. It's a duck, guys, you know, as far as we're concerned. But let's look at what we just did with gold. Rates go sideways. What does the market do? Can I get these more overlaid? Yeah, I can. So at the point of rates going sideways, and we've actually extended on this and said, actually, do you know what? We've also sort of looked at, before we get to this stage, what happens with the markets. 1 second, guys, I'm just trying to find a price range. So rates went sideways here. The S&P rallied 41%. We're just at that period now, by the way, guys. Let's take another look. Rates went sideways here. S&P went on and put in a new high. Rates went sideways here. S&P went up. And this is a bit of a trickier one. Rates going sideways here. After being hiked. You know, you could class the whole of this, essentially, if you wanted to. Rates go sideways here. You know, we can go right the way back and show you the correlation. The S&P actually rallies when rates go sideways. And to extend on that, not only does the S&P rally when rates go sideways historically, it also finishes up higher than when they started rates, which is contrary to popular belief. If you look at where they started rates here, by the time they finished, the S&P was up nearly 55%. Even today, that's true, okay? Only just. If you look at when they started rates, the S&P today, when they're potentially stopping it, is up 9%. So historically, rate hikes are bullish for the markets. Your macro LARPs have completely confused people. You know, look at every time they've upped rates previously. So we've had that rate hike. You know, we can do here to here. You can also do here, for example, to here. You know, every time they up interest rates, the markets go higher. Every time they stop interest rates, the markets continue to run. We know the lagged effect fundamentally with rates. We've looked at things technically. We have a full 360 analysis on the macro view that is being followed perfectly and allowed us to be absolutely spot on the markets over the past 11 months. And actually, we were spot on in 2022. Okay, we were a little bit late getting out. We didn't get out at 69K. I do apologize. We got out a little bit later. But we're now back in the markets. None of this is financial advice, just my own take on it, and you guys do with it what you will. And we're expecting that continuation. And actually, going back to the chart we showed at the start, gold's expecting that. The S&P is expecting that. how do we factor this into Bitcoin and crypto? Well, it's my assessment. We can get rid of the Fed funds now. That this is Bitcoin against the SPY. This is a broken out market, in my opinion. So Bitcoin is in an uptrend now, I believe, just like we assessed the crypto space in an uptrend against the dollar. Bitcoin is in an uptrend against the SPY. So if the SPY is going to go on and do well, what's Bitcoin going to do? Take a look at NASDAQ. It's in an uptrend against the NASDAQ. It's also in an uptrend against gold. So you are going to have a crash. But just to pull the Fed funds back on again, to really round off what we're saying here, guys, a crash will come, but the bears have totally misunderstood and just got consumed with the narrative. And this is just dangerous. And every time the market pulls back slightly over the last 11 months, they've doubled down and wrecked people. Certainly the ones that have been talking publicly. And we're all going to get things wrong. I'm sure I'm going to get 1,000,001 things wrong in the future. You know, I plan on this is the start of my financial career, I guess, which you guys are all a part of, you know, and I'm sure throughout our career, we're going to get things wrong. But we like to sort of acknowledge when we're spot on. So if you look at, and we're going to actually take this off log, from when they start up in rates to when they finish it. So let's do from a pause to crash, which is potentially where we are, because that might help people. So a pause to crash. So this one took 420 days from the time they paused. This one took nearly 500. A bit of a pariah, this one, because it was kind of, they upped rates. They didn't bring them down in traditional fashion, and then they upped them again. But if you go from here till the crash, it's 1,000, nearly 2,000 days. If you go from here to the crash, it still gives you a grace period of about 200 days. And we're saying the crash is going to come, rates are going to lag. The crash is likely going to be due to a lot of refinancing that comes under higher rates unless they can bring them down, and you know, then that's your soft landing scenario. But a crash is going to come, but it's going to be probably the end of 2024, 2025, which actually you could see a full Bitcoin 4-year cycle theory play out into, and then it would miraculously align. Something walks like a duck and quacks like a duck, guys. We're going to call it a duck. This market has well and truly broken out, in my opinion. You know, this is now what we would call a stage 2 breakout, an uptrend. We've had so many altcoins. We gave VRA the other day at the point of break. What else did we give? Filecoin. There's loads that we're looking at right now. Solana was one that we were watching just before this massive run. Loads of altcoins are here right now, and they're ready for this. You know, and actually the market supports that. Chainlink's been this has now become one of our largest positions due to the move that it's had. We're always bullish on Chainlink, expecting this. It's on volume. It's beautiful. You know, remember, rates do lag. This is our game plan. You know, and I do go into a lot more detail in regards to what I'm buying, where I'm buying with my Patreons, and of course this overall view, and we correlated in a lot more detail. So if you do want to become a Patreon, do consider checking the link out in the description. Well worth it. We've got an amazing retention rate. Let's finish things off with a week ahead. So there's not a great deal. You've got Fed minutes. You've got US Chicago Fed Index. Dollar's really the main thing to watch. If the dollar's now in a downtrend, and actually to line up with our thinking of the markets, we've been looking at the dollar in a broader downtrend that has now potentially started. You know, the dollar could just be in a huge channel that it may want to visit the downside of. Yeah. And then you get that, you know, whatever the landing is into dollar, everyone FOMOs into it, milkshake theory style thing. But you've got, it's not a heavy week for data, I wouldn't say. But there is going to be some movements with the dollar, and we'll see. You know, Bitcoin's done a lot. It may want a bit more of a rest. Dollar's done a lot to the downside, but we will see. And we'll be covering it every day, as we do on this channel. So if you're not already a subscriber, like, comment, and subscribe. On that note, I'm going to love and leave you. Have a smashing Sunday, guys. Get ready for Monday. I'll see you there.